Greetings. I hadn't posted about the hedge fund for a while, so I want to share one thing that managers look at. So what are these magic hedges? What are these things that move up when the market moves down? And also, unfortunately, put a little bit of a break on performance, but not completely. So I'll show you. There's some that are really perfect and some that are helpful. And you'll see both. So let's take a look. We compiled a really great record, outpacing stocks, bonds, and Bitcoin over the 5 years in which I managed the fund. You can see it in this chart right here. Then in 2022, the market totally cratered. So to put it conversely, the market, if you include our strategy that actually appreciated that year, you did like 75% better being hedged. So that's sort of like not losing 3/4 of your money and ending up with 25%. Conversely, it'd be like sitting on Bitcoin at 100,000 right now and watching it ride to 400,000. Not losing the money is as good as like a 300% return right there. There is a cost to all of this, and the cost is paid today because the market's up. So with the futures, you see, we shorted them at the end of the quarter at 98, and now it's up to 99. So when we shorted them, we were going to make like 10 or 15 interest on the position for our clients. Also, the options, I shorted them so we'd have some income no matter what was happening. So on this screen, there are only two shorted. And you see a delta of negative 0.4, which means, for the two Bitcoins goes up, you lose 4/10 of one going down or vice versa. In post yesterday, let's look at what our positions look like today. So the market went down, and you can see here the March 28th future is actually showing really good appreciation, 38%. Because there's a small deposit against it. The actual decrease from the mark was 98,589 to 97,058. Not remarkable. And then you see one more of the limit orders to short the future. The option hit, and so we got a little gain there, which isn't surprising, because it was closer to where we purchased it, and also they simply don't move as much. One other quick note here. So this option was just purchased. One thing you do if you're a hedger or trader of options, you always look at what the implied volatility in the price is. This option is unlikely to be called, in my opinion, at 120,000. Bitcoin's down at 97 by the end of the quarter. So we probably sold something, or three of them at this point, that's going to expire worthless, and that's a good deal. But also the 56% volatility that this option price assumes is actually slightly higher than the actual volatility of Bitcoin. So anyway, I'll finish my little spiel about hedging with 3 points. Number one, futures are awesome. And the secret sauce is that while they don't lose money, you actually earn money on the hedge because you sold them at a premium and you realize that premium over the quarter. Sometimes you even make a little extra money if the market crashes. Number two, options are also good, but they only offset losses with their income. We started selling options as well as futures because that allows us a little more upside, and we wouldn't have made like the crazy return we did, 300% or something, in 2 years without using options, without letting the price move around that much. And then finally, oftentimes, especially when you sell the options, the market really overestimates how volatile Bitcoin is. So that's extra income and an extra special good deal to use options for hedging. See you guys later.